And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Hello and welcome to the show. This is Andy Webb with Lifestyles Unlimited. And as always, we're working on your financial freedom. And I hope you're having a great day out there. I thank you for tuning in. And if throughout the course of the show you have any questions, send those over to me. You can email me at askandy@luinc.com. Again, askandy@luinc.com. And I do get a lot of questions. And some of the questions I've seen more recently, kind of, they're in this vein. And we're going to answer the question. And that question simply, just summarized, is now a good time to buy? And we're going to approach this from a few different angles, because that's typically where your questions are coming from. And a lot of people that are asking this question, they're asking it actually, I would say, from a good place, a thoughtful place. They're wondering about this time of the year. We're in the fourth quarter of the year. Holidays are coming, right? People are distracted. If I buy a house right now, will I be able to get it rented? So what we're thinking about here is seasonality, the seasonality of the market. And we'll talk about that. And should you be concerned? And what should you think about? It's a good question. But a lot of people ask this question from a place of fear as well. What about the election? What are we, a couple weeks away now from the presidential election? And you're going to want to hear this. I found some very interesting information on our government, on Congress in particular, with respect to their real estate investing. I think this might dispel some of your fears. But yeah, it's right there. It's present. You're afraid. Which direction's it going to go? What's going to happen? Or maybe it's more of a macroeconomic thing. What about the economy? Feels like it's doing okay, but everything I read in the press about debt going up, credit card debt, repos on cars are increasing, all this stuff makes me wonder. So what about the economy? What about the housing market? Has been pretty hot for quite a long time. It seems to be in an extended cycle. It's surely going to crash. Interest rates, another one. Should I buy now with interest rates where they are? Yeah, they dropped. The Fed dropped the federal funds rate recently, 50 basis points. That was already priced into mortgage rates, by the way, as we heard not too long ago from some of our financial experts on the show. But yeah, rates are too high, common fear. So lots of fears, lots of questions. Let's take those apart and explore why it does not matter. And I want to start with the macro stuff. And especially, again, those politicians, since the election is so near. And I want to get to then that more, let's say, sensible question around seasonality, more of a practical question, right? And just a footnote, I just entered this past week, I just entered into 2 contracts to buy 2 single-family houses, 2 different markets, one in East Tennessee and one in Georgia, near Atlanta. So yeah, let me lead by example and say, yes, I clearly think it's a good time to buy. And I'll tell you more about those properties in another show. This is fresh off the presses. I'm still in the option period on one, still doing our due diligence. So who knows? The one may stay, the one may go, don't know. We'll figure that out. And if you're new to the show, well, let me tell you this. I live in Dallas-Fort Worth in North Texas. And I personally have been buying single-family rentals around Dallas-Fort Worth for over a dozen years now, and we've got a couple down near Houston, in fact. So I'm in Texas, and did I not just say Tennessee and Georgia? Is that possible? Can you do that from Texas? Yeah, we have a lot of members at Lifestyles Unlimited that are buying across state lines, and that's the beauty of Lifestyles Unlimited. You can tap into that now national infrastructure and follow one of the sayings we like to tell you: live where you want and invest where it makes sense. Essentially, all real estate is local. We'll bring that up later. But I'm able to use that infrastructure, and as members, you can too. What is Lifestyles Unlimited if you're new to the program? It's an education and mentoring group. Been around a long time now, founded by Del Walmsley in Houston, Texas, about 34 years ago. It's a very long track record, over 3 decades of educating and mentoring people that are totally new to this space. When I began 12 years ago, Del came up to Dallas from Houston. He taught what's called our 2-day financial freedom seminar, where we learned all about investing in houses and all about investing in apartments. Del came up here in person, and I learned a ton. Didn't know anything prior. and a lot of people don't. Some people come from real estate backgrounds and join as members, but a lot of people have no idea. So we educate you, and when you get to buying that first house, we mentor you. Or for me, buying in Tennessee or in Georgia from Texas, I was contacted by one of our national mentors once we went under contract. So they're by your side to help guide you as you do new things and perhaps, like me, expand those horizons. So we teach you how, right? You don't know how. You have questions about the processes. That's again, I gave you my email earlier. A lot of questions I get are process-oriented stuff. How do I do X, Y, Z? And we teach you that. But it's not just the education, it's the mentoring. And I'm going to go above and beyond and say the inspiration as well. When you go out to a lot of our events, you're going to sit down next to investors that maybe have been doing this for just a handful of years, and suddenly, boom, they have 10 houses, and you're like, what? You can buy 10 houses? Yeah, you can. That's going to get you to that financial freedom. The question is now a good time to buy? And there are lots of reasons why you may say no. And one of the big things that's right now at the forefront of your mind is surely the election. Maybe I should just wait and see how things shake out, see who winds up in the White House, see who takes over the two chambers of Capitol Hill. So we're going to spend some time here, probably all of this segment, maybe a good portion of the next, talking about those politicians, because that is the big news and it's fresh on your mind. And so you're wondering, should I be worried about the coming election? And should I be worried about the impact it could have on real estate investing? So you're asking yourself that now, and I dare speculate, if you've been thinking about this real estate investing for a while and still haven't done it, I'm going to guess that you probably asked yourself that same question 4 years ago. And maybe you did ask yourself that, and that stopped you then. And what's happened in the interim? Nothing. And you might have even asked yourself that very question 8 years ago or 12 years ago. And personally, I can't say I thought about it too much. Yeah, I'm interested. I follow it. It's hard not to notice it. If you turn on your TV for any length of time, you're going to get inundated right now by political ads. It's very much in your face. I don't know about you. I'm getting texts and all kinds of calls, political calls. But other than that, I try not to think about it too much. And we began investing a little over a dozen years ago. So prior to the start of that cycle. So I've gone through 3 different presidents. I've gone through 2 shifts of party control in the White House. And regardless of who sat there, I've done very, very well. I've achieved my financial freedom, did that years ago, regardless of who sat in the White House, who was on Capitol Hill. And I became real estate retired, left corporate America coming up on 3 years now. That's me, that's Andy. Been doing this for a dozen years. What about Del? I mentioned Del Walmsley. He founded the organization 34 years ago. He's been an investor for over 30 years, 3 decades plus. I didn't do the math, how many political cycles has he been through? How many presidents has he seen come and go? How many shifts in Capitol Hill, in the chambers of Congress, the House and the Senate has he seen? If you ask him, should you be worried, he's going to tell you it doesn't matter. It does not matter who is in the White House or who controls Capitol Hill. I mean, they tend to be bottlenecked, standing in a quagmire regardless. But he keeps investing. He keeps investing regardless. And he'll tell you his income and his net worth go up every year. But I know. That's just 2 data points, anecdotal evidence over a pretty big period of time, I'd say. But how about something more concrete? And I've got something more concrete for you. And this was very fascinating to me. I asked myself the question, okay, what percentage of lawmakers own rental property? And I came across an article. This is in Business Insider. Now, this is about not quite 3 years old now. This was printed in late December of 2021. And it's referencing some reports that were put together using 2020 numbers. But I think this is a good surrogate for our discussion today. And I suspect that if you do any digging on the numbers now, it's probably going to be close to what we're going to talk about. And the title of the article, if you want to find this, it's When a Lawmaker is Your Landlord. Capitol Hill is packed with senators, House members, and senior staff who rent out property. Again, Business Insider, this is the article that you can dig up. But a couple of bullet points here, at least, and again, this is in their 2021 report, at least 238 federal lawmakers are also landlords. More than 200 senior congressional staffers also own properties, as well as land that they rent across the U.S. Here, let me turn this over. There's no limit, it says, under current law on how much these guys can rake in as landlords. That's their term. We tend to refer to ourselves as rental owners. That's quite a lot of people that are in the halls of power that do what I do, that do what you're thinking about doing, that do what Dell and thousands of other members at Lifestyles Unlimited do. Remember that. They got their hands in the pie as well. And it's interesting, the way they got to this data, by the way, they have it's called the Conflicted Congress Project. They reviewed nearly 9,000 financial disclosure reports for all of the sitting lawmakers at the time. Now, obviously, some of them have moved on, passed away, whatever, as well as their top-ranking staffers. And that's where they got to the data. And they've identified, Business Insider said, hey, real estate is a favorite way for members of Congress to pad their terms, their, I guess then, $174,000 a year salary. In all, this is the key, listen to this, in all, 44 senators, out of how many? 100. 44 senators and 194 U.S. House members had some sort of rental property in 2020, according to those personal disclosures. And you've got to ask yourself, if these guys are padding, as they put it here, their income, that salary, through rental property, are they going to take any kind of action that causes problems for them? It's very interesting. There's a note in here that it says, in general, members of Congress and their senior staff members are not allowed, get this, they're not allowed to earn more than just about $30,000. It's $29,595 at the time in income outside of their federal salary. So they get their federal salary and hey, you can earn close to $30K more. But, and there's always an exception. There's always a loophole. Rental properties are exempted from these limits. They've put this cap in place for themselves, but then they've put in a loophole that favors real estate. So rental properties are exempted from these limits, as well as certain other earnings, they say, from stock trades and, book deals, right? What do we see flying off the shelves, all those books these days? So clearly, the members of Congress, the Senate, they're taking advantage of this. So they made a lot of money. Now, they do go on to say, hey, it's not clear. Are we talking gross rent, net rent? We don't know exactly. But here's some more numbers for you. It's interesting. 88 lawmakers reported earning at least $15,000 or more in rental income in 2020 from a single property. Again, I don't know if that's gross rent. Is that their net? Is that their take home? Is that what their cash flow every month or every year? 15 lawmakers, get this, reported owning at least one property where they listed earning up to $1 million in rental income. I'm going to tell you something. I know at least 15 senators or congressmen that are not going to make any changes via legislation that's going to hamper that $1 million plus dollars. What do you think? Wow. I'd not seen these numbers before. I'm very happy I found this article. If you have any concerns about the politics and what's coming down through the election this cycle, don't worry. I'm going to get a little more concrete. Maybe you're sitting there thinking, those are all the Republicans. That's what they do. Maybe you're thinking, it's the Democrats. And we're going to get a little more into the detail there when we come back and a shift into some of those other questions you have around the economic cycle, interest rates, and seasonality, more importantly, so stick around.
Lifestyles Unlimited's Real Estate Investor Radio Show returns in a moment. Got questions? Go to lifestylesunlimited.com.
Lifestyles Unlimited member Chad on the life-changing rewards of real estate investing.
Whenever you have residents coming in thanking you for taking what was dull and drab and turning it around, making their lives better, that's definitely a blessing.
Become a life changer today with Lifestyles Unlimited. Text the word radio to 88007. That's radio to 88007. Join for just $297. A 60% off savings. Lifestyles Unlimited. Text radio to 88007.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the show. I'm your host, Andy Webb. Thanks for joining me today. If you have any questions, you can send those to me at askandy@luinc.com. That's LU as in Lifestyles Unlimited, askandy@luinc.com. And I want to wrap up this conversation. We're talking about the question, is now a good time to buy? And a big thing on the forefront of pretty much everybody's minds right now that's paying any attention at all is the looming election, the presidential election, plus the sundry House and Senate elections that will be in play as well. And you may have fear that, I don't know, man, what if the Democrats keep power and take control of the House and just to control everything? what's going to happen? I tell you, don't be afraid. And we were looking at an article in the prior segment. If you miss any part of the show, go check this out, lifestylesunlimited.com. And you can find the podcast or the radio tab there. This will be archived there probably in a couple days. But we're looking at a very interesting article. This is from 2021, so it's a couple years dated, but I think the numbers that we're seeing here will apply today. They've probably gotten larger. So we've heard that a lot of lawmakers supplement their annual stipend, right, that they get their annual salary through real estate. It's a favored investment tool. So simple question is, well, do you think they're going to do anything to put that at risk? Some lawmakers, well, they're supplementing on one property maybe by $15,000 a year, it says. But some are getting over $1 million. I don't think they're going to want to change anything. Who's that? Who are we talking about here? And again, this is from 2021, so some of these names may have moved on. I don't know. Republican. So we have Republicans and Democrat. Here we've got Republican Senator John Kennedy of Louisiana. I like how they put this. Listen to this. He's piecing together a small real estate empire stretching across the deep South. I guess that's what I'm doing. I just told you I got a house under contract in Georgia, one in Tennessee. I'm in Texas with most of my rentals, so I guess I am too. We've got something in common, and I don't think that guy's going to make any changes to my detriment. What do you think? Here's another one, also a big R. Hey, you know this guy, Republican Senator Rand Paul from Kentucky. Did you know that he's from Texas? And guess where he's investing? He owns 6 properties, it says, at the time of this article being published, in Lake Jackson, Texas. Guess what? I know a lot of members that buy in Lake Jackson, Texas. He's got 5 residential homes there, plus some farmland. I'm not so interested in that and some other stuff in Florida. But, yeah, another guy buying residential rental real estate to supplement that income. He's not going to want to change those laws to our detriment anyhow, is he? So those are the R's. I'm just picking a couple here out of the article. Here's a D, Democrat, Senator Chris Coons from Delaware. He's got property in Florida. I hope he still has it there. Earning as much as $50,000 in rental income. Again, we don't know if that's gross or net. Is he going to make any changes to the laws to his detriment? And, you know, these guys, they go into this for public servants. They're public servants. They come out the backside changed, a lot of them. I guess I'm a cynic in that sense. That's Chris Coons. Another D, Democrat, Representative Amy Barra, California, reported that he and his wife own 9 rental properties. Ooh, they're getting up to that magic double-digit 10. 9 rental properties. They believe in the growth and the potential of the Sacramento County area, it says. They've been in that area for a couple decades, know it well. That's where they're apparently investing. So whether Republican or Democrat, we're seeing congressmen, senators, from both camps doing this. And it's not just them, it's their staff as well. Now, she's since passed, but this is references James Lazarus. Was the state director for Senator Dianne Feinstein, right? Democrat, California again. This guy, get this, reported earning $600,000 to roughly $6 million from 7 of his rental properties. Probably not the kind of single family houses that I'm buying. It looks like there's some commercial stuff in there, in fact. Some residential, but yeah, who's whispering into the ears of the congressmen, of the House, of the Senate? These guys. And we heard that 200 at the time of this study were very much invested in real estate as well. So I think I beat a dead horse with this. I don't want you to be afraid. I don't want you to sit there now and think, I got to wait till the end of the election. I'm not waiting. I'm buying now, as are countless other members at Lifestyles Unlimited. Don't let that big thing stop you. In fact, the fact that it probably is stopping a lot of people makes it more advantageous to me. If there are fewer buyers in the market right now, whether because of seasonality or some of the other things we'll briefly talk about, or this big bear that's looming in front of us, the election, guess what? Fewer fish in that pond. I'm going to go in and I'm going to take over. Right? You have an advantage now as a buyer. When everyone else is afraid, get in. What else is scaring people right now? Politics, election cycle, all that stuff, yes. Very interesting article, though. Again, go check that out. It was titled, When a Lawmaker is Your Landlord. Okay. Economy, housing market, interest rates, these things all cycle. They all move in a cycle, right? They cycle up, they cycle down. With respect to real estate, with the real estate market, broadly speaking, again, all real estate is local, but painting with a broad brush here. We're in a really long cycle with our houses. Apartments have shifted. Apartments are a different animal. I'm thinking about houses here in particular. The apartment market has definitely moved, And if you want to become an apartment investor, this is 100%, without doubt, the time to get in, get the education, make sure you know what you're doing, whether it's as an active lead syndicator investor or as a passive investor. Get in now. Things are coming. If it's the coming election that has you hitting pause on your real estate investing button, whether you're new or maybe in the middle of your growth or experienced, forget about it. Those people are way too invested in real estate to make significant changes that are going to be to your detriment and mine. 288, this was a 2020 study, by the way. 238 of our lawmakers at the time are also landlords, very much invested. Don't forget about the politicians. What about the economy? Well, it goes up and down. It goes up and down. The nice thing with real estate, you don't have to panic sell. If you're in the stock market and it starts to drop, everybody starts to sell and it just drops more and more and more. Great analogy that Del Walmsley had is it's like a gun held to your head. Bam, you have no chance to get out of the way. Real estate does not move that fast. As much as sometimes we'd like to move a little quicker than we do, I do anyhow, it's pretty slow moving. And you can see these things coming. And you can shift your strategy. And you can make your moves. But let's talk about never lose money. I mentioned one of Del's rules to investing. Rule number one, it has to cash flow. If you make sure you're cash flow positive, that's going to carry you through these ups and downs. But rule number two, never lose money. How do you do that? Well, the biggest thing is don't go out and pay top of the market. Don't pay retail. If you understand what we do as members at Lifestyles Unlimited, whether we're buying houses or apartments, we're going out and we're buying right, and that means buying at a discount, and through that process we're creating a huge equity buffer, and that's going to protect us. Let's say I buy a house for $100,000, I put $50,000 in work into that house, and its value when I'm done is $200,000. You can see the $50K spread there. If you follow the Lifestyles model, buying with hard money, which is a type of private loan, doing renovations and then refinancing into long-term debt, your cash out of pocket on those numbers will be maybe $20K, but you've got an additional, right, $40K in equity that you've captured. Concrete example, one of the two houses that we just contracted on, my projected, right, we're still in our due diligence phase, but projected out of pocket, my cash invested is under $15,000, but the amount of equity that I'm going to capture, that I'm going to create by adding value back to this property, by doing renovations, by fixing things that are broken and updating it from whatever time capsule it emerged from, it's going to create an additional amount of equity close to $55,000. What is that? 380% return just on my capital gain. So all told, with my cash invested, 15K, plus the equity capture, I'm sitting on a combined close to $70,000 in equity. That is buffer. If something does happen, I get sick, wife gets sick, I don't know, we need to dispose a bunch of our houses for some reason to get liquid, we've got that equity. If we need to reduce the price for a fire sale, I've got that equity. If the market's down when we need to do this thing, we've got that equity. We can reduce it a little bit. That protects you. That helps you sleep better at night. So we follow the Lifestyles Unlimited model, which means buying at a discount, finding distressed properties that do need work, and adding value by going in and doing those renovations and creating and capturing equity. You won't lose money if you do that. If you're doing it right, you will not lose money. I have not lost any to date. And if you listen to Del Walmsley, 30 plus years of investing, he'll tell you the same thing. So economic cycle, housing cycle, doesn't matter, up or down, we make our own economies by how we buy and how we operate. I do want to get back to interest rates, mortgage rates, because that comes up quite a bit. And yes, that does and has had some impact because, like I said, rule number one, it has to cash flow. Well, if interest rates go higher, my cash flow naturally goes lower because we hold loans, we hold mortgages on these properties. So if interest rates are up, and they have been up, it's going to compress cash flow. There are other things that flow into your cash flow calculation. We buy, as members, we buy a distressed property, we go in and we fix it up, we fix everything, like I said, that's broken now or could break in a handful of years. So maintenance is zero. So what do I have? I've got my interest, my mortgage payment, principal and interest, I've got taxes, and I've got insurance. Now when I started buying years ago, we were getting cash flow somewhere $400 to $500 per month, just out the door. Over time, you hold, by the way, that fixed rate mortgage stays flat, rents go up. That number gets bigger. More recently here in Texas anyhow, with our property taxes where they are, where insurance where it's gone, cash flow tends to be maybe $200 to $300. I've seen the occasional bigger number, but that's where we are now. By the way, when I joined in 2012 as a member, that's where we were then too. Rates have kind of gotten back to where they were. And people have been doing this for decades as members regardless. But thinking about the mortgage rate, you you're not married to that interest rate. Let's say you get in at 6.5%, 7% now. You're going to go do all the work, right? You're going to buy with hard money, higher interest rate. You're going to do all the work. You're going to refinance out into a 30-year note, either conventional because you have the income on your personal taxes, or some sort of commercial product like a DSCR loan. Look that up. But you're going to refinance, and let's say you get a higher rate. Let's say it's 8%. So you're doing a rate and term refinance, right? Think about that house I just mentioned, $15K invested, but $55K in equity. There's a huge equity number there. I cannot pull that out when I do a rate and term refinance. This project may take 2 months of time in terms of the renovation. So we'll get to the finish line. We'll do that rate and term refinance. Let's say the debt is at 7%. Now, election comes and goes. Everyone's euphoric at the outcome. Positive, everyone's happy, rates start to come down, and now I can get a refinance at, let's say, 5%. Well, I go out and do that, and now I got all that equity, and I can pull that out. So if mortgage rates do decline, let's say 6 months from now, guess what? I've now seasoned that new loan, that rate and term refi I did, and I can do a cash out refinance. I can get that equity out and reset the interest rate. So don't worry about that mortgage rate. They're really not that high. So back to market cycles, economic housing markets, they do cycle. Not always in unison, and not always the same way across the country. I want you to realize that all real estate is local. Some markets may decline while others are rising. Some markets may see a shift to an increase in the renter base while others move to greater home ownership, right? If you can tap into a network like we have at Lifestyles Unlimited and invest in other markets across state lines, that gives you flexibility to shift dynamically as these things change. Why did I buy in Tennessee? Why did I buy or am contracted in Georgia? Lower taxes, lower insurance for the moment. Cash flow is much higher there, plus that equity capture. So I now have the flexibility to broaden my scope. I can be more selective about what I'm buying because I have a bigger pool of opportunity to me. So give that some thought. All real estate is local. You don't have to be. Last question, best question. Seasonality. Here we are in the fourth quarter of the year. Is it a good time to buy? Should I buy now? Well, I am, personally. So yeah, if it's a good asset, buy it. Your fear is that it may not rent because we got Halloween coming, we've got elections coming, we've got Thanksgiving coming, we've got Christmas coming, we've got New Year, all this stuff's going on in everyone's lives, and they're not thinking about moving, they're not thinking about renting. So I would tell you just, hey, if it's a good asset, get it under your control. Number one. Number two, budget. Budget for a little extra downtime, a little bit of extra vacancy time if you need to. Build that into your numbers and see if it still works as an investment. Of course, that too is market specific, so be sure to look at the days on market for this time of year in that market, in that submarket, in that city, in that neighborhood. Look back 12 months to see what was happening then. Now that can change. But does it change dramatically from the days on market in June, July, April, May, June, July, to October, November, December? Plan on that. How much inventory is in the market right now? I just rented one of my houses in just a little over 2 weeks on the market. Very strong rental market. I had no fear. Knew it was going to happen just easily. Residents moved out, got it ready, bam, done. I have another one that is taking a little bit longer. This pocket always does, and I can see that if I look at the days on market. Budget for that. It's okay. But above all else, learn to follow the Lifestyles Unlimited motto. Best product, best price. Don't do lipstick on a pig. All right, let me say it again. Do not do lipstick on a pig. Best product, best price. Go in and fix everything, update everything. That's going to help you rent faster. It's going to help you keep your maintenance low or at zero during the hold period, make you a happier investor. So back to the fundamental question, is now a good time to buy? If you're thinking about seasonality, yes, it's always a good time to buy. Focus on buying the right asset at the right price so you have cash flow and you have that equity capture that creates that buffer so you can absorb whatever market cycle we're in, whatever the housing market is doing, whatever happens in the elections. And again, don't fear what's coming here in a couple of weeks. Take some action, secure your financial freedom, become real estate retired, and you'll understand it just doesn't matter. It doesn't matter. Now's the time. Hey, thanks for listening. You have a great day.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.